Okay, India has been the best performing market in the month of March, really overriding all the global cues. But for the morning, how are the cues looking? Here's Nigel with the world view.
Well, it's green on the screen, so the cues are looking quite positive. Overnight, the U.S. markets, they ended with good gains in yesterday's trading session. There are hopes. Now the U.S. representatives, they're in Beijing, and the trade talks resume. So there are hopes that we get a positive outcome coming out of there. And not just that, in terms of the start of the year, well, the S&P 500, it's headed for the best first quarter all the way in the, since 1998. So pretty good start to the year, up nearly around 12% odd. The good news overnight was, in fact, the bond yields, they moved from around the 2.35% to around 2.4% odd. So some stabilization coming in there. And on the back of that, you had banking stocks that were gaining. All of them were up close to around 1% approximately. And from the Dow components, you have Nike as well as Caterpillar. Both of them moved higher by close to around 1% in yesterday's trading session. In terms of economic data, in the fourth quarter of last year, that's 2018, the US GDP grew by around 2.2% odd. And for the year, it grew by around 2.9%. Remember, President Trump has been talking about a reading of around 3%, so a tad bit lower than what he was working with. In terms of the European markets, well, they were mixed. We're waiting for an outcome and votes in terms of what's going to happen in terms of Brexit. So you had the FTSE that was up close to around 0.5% odd. But President Trump here tweeted yesterday, he's talking about the OPEC increasing production and bringing down Brent crude prices. Well, Brent crude prices didn't really react to that. In fact, still holding at around $68 on a per barrel mark. Also, you're shifting focus to the currency space. The dollar index, well, that has strengthened, holding at around 97.2 odd. And you have some weakness on the yen. And that's replicated because in terms of the Asian markets, the Japanese index was one index that was holding with good gains, up close to around 1%. Asia's in a good place. SGX Nifty, though, indicating a flattish start. Back to you guys.
Okay, well, thanks a lot for that, Nigel. So SGX Nifty indicating that the start could be flat. But the billionaire investor Warren Buffett says that economic growth has lost some steam recently. Speaking to CNBC's Becky Quick, he adds that the economy is not reversing its course, but only growing at a much slower pace. Listen in.
It's distorted in the last week or two by the floods in the Midwest, and we move a lot of coal. But there are 20-odd categories that the railroad industry reports on for all the railroads. And winter's always a little bit of a tricky thing, but I would say that it looks like it's slowing down. I don't mean it's reversed in course or anything, but it does seem from all of the businesses, but especially including railroad statistics, because they come so fast. And they cover such a broad spectrum. And it gets distorted by whether people are hurrying up the Pacific trade because they're worried about tariffs and all of that sort of thing. But I would say that it does look like the pace of increase in the economy has slowed down. And I wouldn't call it somewhere close to noticeably, but I wouldn't go beyond that.
Have you seen it broadly? Is that when it comes down to commodities, when it comes down to things that retailers are ordering, when it comes down to energy, or are there a couple of areas where you see more weakness?
Well, there are these 20-odd categories, that autos and aggregates, you name it, grain. Almost all of those categories throughout last year were trending strong, and I would say that just looking at those figures, but also looking at some other figures, a good many other figures I see on a weekly basis, where it looks like things have slowed down, and you'd always have the weather factor, but that's the way I'd bet looking at what I see today.
I don't want to get too wonky on this, but the yield curve, when you look at the 10-year versus the 3-month, has inverted. And again, this is a pretty important signal. It can signal a recession. It has signaled every recession that we've seen in the last 50 years. And it's only given an incorrect signal once. It's the first time it's inverted since 2007. Do you see a recession on the horizon?
Well, though, I just hope I see a lot of recessions. I hope I live long enough. I don't know how many recessions I've lived through, but I was born on August 30th, 1930, and the Dow was a little over 250, and it was, by the time I got out of college, there was only 1 or 2 days after my birth that it had been that high. So I don't know whether I've lived through 8 recessions or 6 recessions or you name it, but that's part of a capitalistic system, and we will have them, and it won't change anything Berkshire either invests in the way of. It may offer us more opportunities, but in marketable securities or business, if we see a good business, and everybody in the world is bearish, and that inversion has gone to 100 basis points or something like that, we're going to buy it, and we'll buy it enthusiastically.
Okay, there's a reason Warren Buffett says, right, that he loves recession. Because that's when you get all the stocks that you want at your price. Otherwise, you have to go with the market. But in recession, in depression, in bear market, you get to buy your stocks at the price because you know the next bull market will come.
And yesterday there was someone else who joked exactly this, that in the past we have had 9 recessions on 5 yield inversions.
Yeah, that was what someone said. Also, it's years and years of wisdom speaking, right? Not perturbed at all by this talk of recession. Well, that's Warren Buffett for you. But let's do one thing. Let's take a quick break on that note. On the other side of the break, so many stocks to talk about. Our entire research team will be joining us to give us a list of top 10 stocks. Stay with us.